Good day Forex trader. Your USD Forex signal, weekly bearish. There is a strong support zone above $1.1500. Today's your USD signals. Risk 0.75%. Trades must be entered before 5 p.m. London time today. Short trade ideas. Short entry following a bearish price action reversal on the H1 time frame immediately upon the next touch of $1.1624, $1.1671 or $1.1688. Place the stop loss 1 pip above the local swing high. Move the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to run. Long trade ideas. Long entry following a bullish price action reversal on the H1 time frame immediately upon the next touch of $1.1564, $1.1536 or $1.1517. Place the stop loss 1 pip below the local swing low. Move the stop loss to break even once the trade is 20 pips in profit. Take off 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to run. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. Your USD analysis. I wrote last Thursday that a bearish head and shoulders pattern was close to completing, with the neckline at $1.1574. I was looking for a short trade from either $1.1623 or $1.1668. However, the price pushed up past both resistance levels boosted temporarily by the ECB release that day, before turning bearish again at $1.1688. I was correct about the neckline at $1.1574 as that level continued to hold as support. The technical picture now is slightly more bearish than it was a week ago, even though the price has not moved by a great deal, mainly because the neckline at $1.1574 is no longer supportive. We have continued though muted USD strength and euro weakness. The price is not far from long-term lows, but has not yet made a significant bearish breakdown, which will take a daily close below $1.1529 to happen. Another obstacle for bears is the fact that we have a few support levels sitting above the big round number at $1.1500 and these seem to be giving firm support, so it is unclear how much further the price is ready to fall if there is a breakdown. I see the best approach today as waiting for the price to get back to $1.1624 and being prepared to trade short from a bearish reversal off that level, but I think this is not very likely to happen. Gbp Usd Forex signal, pullback likely after Bo decision. The pair will likely resume the downward trend after the Bo decision. Bearish view. Sell the Gbp USD and set a take profit at 1.3600. Add a stop loss at 1.3750. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.3700 and a take profit at 1.3750. Add a stop loss at 1.3650. The Gbp USD price was little changed as investors reacted to the Fed decision and waited for the coming decision by the Bank of England, BO. The pair is trading at 1.3667, which was slightly higher than last Friday's low of 1.3608. Bank of England decision. The Federal Reserve was the main catalyst for the GBP/USD in the overnight session. The bank did what most analysts were expecting. It left interest rates at a record low and started to taper its asset purchases. Precisely, it started to taper by about $15 billion per month. If this pace continues, it means that the central bank will end quantitative easing in the June next year. The bank also said that interest rate hikes will start rising after the QE ends. Therefore, there is a likelihood that it will hike in the third or fourth quarter of 2022. Looking ahead, the next key mover for the GBP USD pair will be the inter's rate decision by the Bank of England. The bank is expected to conclude its meeting later today. Analysts expect that the bank will decide to leave interest rates unchanged. At the same time, it will likely start slowing its giant QE program. The BO decision comes at a time when the UK economic recovery is gathering pace. Inflation has soared while the unemployment has been in a downward trend. At the same time, the services and manufacturing sectors are doing well. And data published on Wednesday showed that the country's home prices have been at elevated levels. In addition to the Federal Reserve, other central banks that have adopted a tightening policy are the Reserve Bank of New Zealand, RBNZ, Bank of Canada, BOC, and Norges Bank. The GBP/USD pair will next react to the upcoming US jobs data. Gbp Usd Forecast. The Gbp USD made some modest recovery this week after it declined sharply on Friday. It moved to a high of 1.3700. This was an important price because it was along the lower side of the descending channel shown in black. Therefore, it can be said that the pair formed a break and retest pattern, which is usually a bearish sign. The pair is slightly below the 25-day and 50-day moving averages while the MACD remains below the neutral line. Therefore, the pair will likely resume the downward trend after the BO decision. Aud USD Forex signal, on track to hit 0.7550 after FOMC. The bullish trend will continue as long as the pair moves above the two moving averages. Bullish view. Buy the AUD USD pair and add a take profit at 0.7550. Add a stop loss at 0.7400. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 0.7435 and a take profit at 0.7350. Add a stop loss at 0.7500. The AUD USD pair was little changed after the latest Federal Reserve decision and strong US employment data. It is trading at 0.7416, which is slightly higher than this week's low of 0.7420. Fed decision. The Federal Reserve concluded its November meeting on Wednesday. In it, the bank did what most analysts were expecting. It decided to leave interest rates unchanged at the range of 0% and 0.25%. It hinted that interest rates will start rising in 2023. The most important outcome of the Fed decision was that the members decided to start tapering their $120 billion per month asset purchase program. If the pace continues, it means that the bank will finish the purchases in June next year. Still, the bank said that it will possibly add or subtract to the figure depending on the market conditions. On inflation, the bank said that the current period of high prices was transitory and that the situation will normalize in the coming year. The decision came at a time when the US economy is showing mixed signs of recovery. For example, data released in October showed that the country's economy grew by just 2% in the third quarter after it rose by 5.7% in the previous quarter. At the same time, the labor market has almost recovered while inflation is at elevated levels. The RBA also decided to end its yield curve control program this week. Data published to date from Australia showed that exports and imports declined by 6% and 2% in September while retail sales fell by 4.4% in the third quarter. The AUD-USD also moved little after the latest jobs data by ADP and strong U.S. services PMI data. Data by ADP showed that the American private sector added 571,000 jobs in October, an increase from the previous 523,000. This increase was better than what analysts were expecting. At the same time, the ISM non-manufacturing PMI increased from 61.9 to 66.7. AUD-USD Forecast. The AUD/USD tilted higher after the Fed decision. On the 4-hour chart, the pair tested the key support at 0.7400, which was along the 38.2% Fibonacci retracement level. The current price is along THR 23.6% retracement level. At the same time, it is still below the 25-day and 50-day moving averages, while the two lines of the MACD have done a bullish crossover. Therefore, the bullish trend will continue as long as the pair moves above the two moving averages.